Okay guys, so good morning to you. So I'm just going to quickly explain like the setups I sent earlier. So I'm just going to explain them in detail. So I'm just going to start with the zones, and I'm going to start with C5. If you look at C5, there's those marked zones. They will be coming from this high on top here. Right, so I was expecting probably price to come a bit up again, probably to form an M pattern, but it didn't. And since yesterday, it's been trending like below or just rejecting on the 50 EMA. And so far, it's been failing to break this zone here. So that's why I mentioned that if it breaks this, it's going to become a zone flip, like price is just going to come on the other side and just start falling. So if you check candlestick patterns, okay, this is H1. I'm going to look at all time frames just for the multi-time frame analysis. But if you check H1, usually I like to come on H1 each time I open a chart so that I can check the price action here. So from all the other candlesticks we see, you see that when they paint on a moving average or on a zone, the price falls, right? When the other candlesticks paint on a zone, the price falls. Okay, so right here, they've painted on this minor zone of resistance. This zone, actually, price was struggling to break it yesterday. I think we were in sales yesterday. The price was struggling to break. Then I think we only took a few pips. Then it broke like around 3 a.m. SA time. Then now it's rejected on this support, and it's also rejecting here. So right now you can see after this RR, I'm now expecting a bit of a momentum to push the price down. So if you check, we had trades earlier, we scaled out. So now I think we'll be going back in. I'm just going to confirm quickly on M15 before I do the multi-time frame analysis. Because I also want to enter one more position, I think, because I think from the price action we're looking at right now, the price will actually break the zone. So I'm just going to open another position. But you should also be in mind that your price can also, okay, your price can also, let me just finish this. Your price can also push back up, back to the zone, because it's almost like a range. If you go to H1, you see that this price movement, it's almost like it's in a range. So as much as we expecting a drop, you should also expect the price to trap. It can take out the early sellers and push back to this zone, right, before deciding to come down. Or it might actually decide to do this. You know, price can do anything, but for now, we have a high probability of actually going to the bottom side. Hence, you see these open sell positions. Like based on the price action, we're looking at there's like higher probability right now that the price can break this zone. So if they do break and you see price pulling back up to this zone, this will become a high probability sell, because at that same time, price will be coming to meet the 13 EMA as well. So that's what we're looking for on C1. TDI is in a squeeze and it's trading below the 50 and below the yellow baseline. So that shows that its price is going down, high probability. So if we are to do multi-time frame analysis, where this whole bias comes from, it comes from the daily chart. So if I'm to zoom in a little bit, you also see that on the daily chart, we've got a pattern now. We've got that big M pattern. We've got RR candlesticks. Yesterday, I thought they would push price up a bit just to trap people, but they didn't. It could also happen today. That's possible. So let's not rule that out. But if they do break the zone which we're talking about, then we know that price would actually be coming down. So we're expecting a break here, and I'm expecting price to come to, let me just mark the zone on. So how we mark our zones, I'm going to explain again. If price leaves a certain area, for example, this one, and they say it's a higher high or a high which is close to the previous high. This was actually a higher high because this was the highest. It qualifies where it took off from as a zone of support. So most of the times price will usually come back to that area. So let me just remove all these lines. They are from previous analysis. So the candle. Okay. Okay, we're just going to remove these lines. All right, so that zone which we marked on the bottom, wherever price leaves the zone. So this applies for all time frames, whether you own the M5, M15, M30, H1, H4, but the higher the time frame, the stronger the zone. So there is a huge possibility that price could come back to this zone of support on the daily chart. So if we manage to break this today, this zone here, there is a higher chance we could see price retesting, then pushing towards the 50 or this support zone on the bottom. That's my view on C5. So if you are to do multi-time frame analysis, that means you just drop down to the H4. Okay, H4, you can see price is actually caught up in that range which we saw on H1. But with the way the candles are set up, or with the way price action is playing out, at some point we're going to get a huge momentum to the downside. That's my bias. Like based on our higher time frame, we are going to get a huge momentum, probably to the 200, possible retest, then back to the support. That could happen, or it can go straight to the support without even retesting. But I guess we have to wait and see how price plays out. Or it could spend the whole day playing inside here, then possibly trap to this zone before making the ultimate move to the bottom. So how we trade is we trade by the price action, which we'll be looking at, mainly M15 and H1, depending with what the candles will be showing us. That's how we take our trades. So for now, we're just going to patiently wait for the price to break the zone. If you notice, I'm currently in on C5 as well. So you might wonder, where is my stop loss? My stop loss for this particular entries, which I have at the moment, will be determined by how the next H1 candle closes. If we are going to get a solid green candle, it might show that the dealer wants to push back up a bit, possibly back into the zone. So I won't be quick to cut my loss, but however, I'll have a stop loss somewhere here. Then we'll see how price plays around that zone. But if it does fall now, I'll just be scaling in, especially if we get a retest here. That's when I'll be going in a bit hard. So for now, that's my setup on C5. I'm just going to quickly check M15 if there's something to pinpoint there. On M15 is still looking fine for me, like for sales as well, based on the candlesticks which I'm seeing. Like for example, this one here, this shows that there's a high possibility we are pushing down. Same with this one. I was in here, I took profits inside here. Then when price started pushing back up, I started entering again. Right, so that's my view on C5. So if they do push back up, it will just be back in this range here. So I'm just going to extend it a bit. Okay, so if they do push back up, it will be probably just to maintain the range which they are in. So if they come somewhere here, you can actually enter more trades here and possibly take profit in the zone waiting for the break. But if they come on top here, you might want to cut loss and see what the dealer wants to do, because they might want to push price back to this zone. That's my view on C5. Then C1. I set sell limits. I think I was in a short sell somewhere between the last two candles, 2 1 hour candles. I was scalping a sell there. I think I took about 10 pips or so, or 20, I'm not sure. But I'm already out of that one. Now I'm waiting for price to come into the zone here, which you see marked on top. If they come into the zone, I'll be expecting them to actually drop. So this zone is based off this one here. So that's why you see there's a limit here. Then there's this limit here. It's based on this zone here. So it's more or less the same zone. Then I've got the other limits, which is on top here. Now, this one is based on a trend line from a higher time frame, which I'll show you just now. This, if they break the zone, they will be inducing buyers. From my point of view, they will be inducing buyers. Then from there, I'll be expecting like a straight forward drop. But they could also react here without getting to our limits like they did. Okay, I scalped this one. I was in here. Then I took profit on the 50. This is just a minor zone, so it can easily be broken. We just want to wait and see what happens. So that's my view on C5. So to do the multi-time frame analysis on this one, what we're going to do is we're going to go to the daily chart so that I can show you like what I'll be seeing from a higher time frame. So from a higher time frame, you can see the past 3 days we've been bearish. It's more of a slowdown in momentum because we've been pushing up. For the past couple of days, we were going up. All right, we're going up. So this is a bit of a slowdown in momentum. So this might actually be just a pullback and price might actually want to push all the way up. But I think we just have to wait and see how that plays out. But I know we're going to have some spikes, especially where we set our sell limits. And if you notice, I put my TP on this area because I still want to see how price will react when it gets on that zone. This will not be a long-term buy for now unless we get confirmations. So for now, we just wait for price to push back into our limits and see how it plays out. Then H4 view. That's where my trend line is coming from. It's coming from the H4. So we had, let me just move this. Okay, we had the first touch here and the second touch here. So now there's a possibility we're expecting a third touch here. So if you see, for all the limits I put, my stop loss, right, it's just above that trend line. So if price is to break out here, I'll just cut loss and wait to see how price wants to play out. So that means I'll just be waiting for reversal candles. So for now, C1, we are bullish, probably until we get into the zone on top, unless the dealer shows us maybe a candle which is showing us that we might be having a bearish move. So for now, C1, we just wait for the limits to activate, then trade accordingly. So if you're in such a scenario, you can see that from this first limit, which is at 92.95, to the last limit, which is at 93.36. I think it's 40 pips. So when you're entering such a trade, you should know that the position you're opening here, if it does not spike, you will be in a loss of 40 pips. Those are the things you need to calculate before you enter a trade. So that means if you're entering with one standard lot size, you will be in a loss of $40. By the time the price reaches that trend line on top, you will be at minus 40 for this position only. Then for this position also, you might be at minus 30 or somewhere there. Those are some of the things you need to calculate. So if for such a setup, you can start by opening smaller lots depending with your account size. If you've got a small account, you can start by opening 0.2, right? Then the next limit, you can open another 0.2 or maybe 0.3. Then on the last limit, you can open a big lot size like 0.50, just depending with your capital, right? So we're expecting a push into this zone and a possible drop back into this area. So this area is coming from, this support area is coming from these levels. You can see price already rejected this zone, but I'm still anticipating them to drop. However, if they break the trend line, that's why we have a stop loss. We're just going to cut loss and reanalyze and check what's going to happen. However, high probability today for me is on C5. So if we are to drop down again, okay, before we drop down, I also want to pinpoint something in terms of zones. So remember, if you draw in your zone, this is the only way you can actually get entries which are a bit of higher probability. Okay, if price takes off from a point where it turned, you see here it was going up, then it turned at this point, then they set a lower low which was lower than this one. It makes this a zone right there. That will be a resistance zone. That's why you see I'm saying I'm expecting spikes in there. So we should be able to get at least some pips from that zone. If price comes from a certain zone and leaves a lower low, which is lower than this one, that makes this top level here, that tiny level, it's also a zone. If price takes off from this low and sets a higher high, which is this one, which is higher than this one, that makes this a zone. So you can draw as many zones as you can, but just make sure you can see your price action clearly. So sometimes if you cannot see it, make sure the zones are like tiny, like for example, this one. These are just minor zones which are inside the bigger zones. So you can use this on anything you trade. It will kind of help you to have the best entries. And you can also use naked charts without moving averages as well. It just works pretty fine because that's your price action. So I'm just going to insert one more zone. One more zone, which is this one. So this is a bigger zone. So it's on the higher time frame as well, which is H4. That just makes it a higher probability zone where we can get spikes. Hence, we have sell limits in there. So by the time our limits activate, if I'm on the charts, I will update you guys, but I will be expecting to take profit right here. Then if we get a break, then possibly we'll check to see if we will be going in a downtrend, but probably that will be maybe later in the day or tomorrow, because this is the H4. So if we drop down to a smaller time frame again, which is the H1, I think I might have explained the H1, but let's just touch on it. So H1, you can see this minor zone, which we had, price respected it, but for now it might break and go to the next zone, which is this one, right? Hence we got a limit. So if price just rejects here and starts coming down, that's when we'll scale in, because by that time the price will be back below the 50. But as of now, smaller time frames, they are in an uptrend, right? Smaller time frames, they are in an uptrend. So let's wait and see how price will react first on this zone and second on this zone. I think that's clear enough for C5. That's about it. M15, 15. Let me see if there's something to pinpoint there. M15, you can see price is actually trading above the 50. That shows you it's an uptrend. Right, so for now we just have to wait for price to reach our areas. So remember, don't chase price, wait for price to come to you. So most of the times it's best if you are just patient, because if you're patient, it helps you protect your capital as well. If price takes off without you, it's still fine, because the best trade which you can take is no trade, because that makes sure that your capital is not declining. There is always a best setup which is going to come out next time. So yesterday we managed to catch a good move as well. I think I shared it in the Telegram group. You see the setup, the before and after on C1. So that's it for C1. Then what I wanted to explain today is, okay, let me go back on C5. As I want to show you like how do you scale out or how do you scale it. Okay, C5 we're already in, as you can see. We explained it a bit earlier. If you enter a trade, I'm just going to give a quick example. If you enter a trade, for example, let's say you caught the first sell on C5 and you were in, let's say you entered here in this zone. Let's say you entered a sell here. If your price spikes or if your price moves in your direction, right? So from where it started moving, I'm going to calculate pips. So you should actually use that approach, especially if you're going to be trading with multiple positions. Why we use such a strategy is because these indices are very volatile in such a way that price can move from this zone to this zone, which is about from 81.40 to 81.70. That's about 30 pips, right? Plus or minus. So if you get 30 pips in a move, you've got 3 positions here, for example. What you should do is, when price hits the 30 pip mark or 20 pip mark, close all positions and open one right here. That will allow you to have 30 pips of cashed in profit, right? 30 pips. The one position which you open here will have a 10 pip stop loss. So if price pushes back, like you see what it did here, that one position will be in minus 10 pips and it will close. It still leaves you at net positive for the day. Same applies if you catch a trade here. It goes back into the zone, close all positions and open one here. And one more thing, make sure you open one with the smaller lot size, right? When you scale in, do not scale in with big lot sizes, number one. Number two, if you get a 30, 40, 50 pip move, close all positions and leave and open only one or leave one running. This allows you to be net positive per trade. You understand? So for example, you see I've got 3 positions open at this point in time. So if this price spikes, for example, and comes back into the zone, I'll close all 3 and I'll open one here in anticipation of a continuation down, right? But that will make sure that if this price decides to pull back up, I would have secured my 30 pips. And that one position which I opened here will be cut at only minus 10. You understand? At minus 10, that's when you know that, okay, this price is not continuing down. Then you like reanalyze. So based on what we're seeing now, I'm still waiting for the price to react, especially, let me show you the zone. Let me just delete this and show you the zone which I'm looking at. Okay, so remember what I said, a zone is where the price turns and creates a lower low. So this here is a zone. Then price came back up and turned here, created another lower low here. So that's a zone. So that's where I'm waiting for C5 right now. If it does break that zone, the only reason why I might hold longer is because the whole area, like from here, is a huge resistance zone. So from here, I'm just holding. If I get a nice M15 candle showing me a reversal at any point here, I'm going to add more positions. But if my price comes above into this area, I'm going to cut loss and wait for certain candlesticks which show me that price is now rejecting and pulling back down. So I hope that's clear. If there's any questions, you guys are free to ask, because I think I'm about to round up. So what you look to do is always make sure you've got your zones, because they kind of help you on where to cut your loss or where to expect your entries or where to break even. So I hope this little session helps you understand. These are the only things I look at when I'm trading. These are the only things I look at. And like, for example, right now, I would add another zone. But remember, if you're on a smaller time frame, the zones are less powerful, so they can be easily broken. Right, so I've got a zone here. Okay, it's failing to draw. Let me just get that pen again. Let me show you where I've got my last zone on C5. This last 10 here, where price turned. Okay, that's another zone there. So what you will notice also is the reason why I opened this trade, I opened it as soon as I was about to start this session. It's because my price left the zone, right? And it pulled down, created a lower low, which was lower than this one. So that makes this area here a zone. So I draw it into the future. Maybe you might be asking, how do I draw a zone? Like, how do I know the size of the zone? What you can do to make it easy is you just start your zone from where the candlestick, the body of the candle is, to where the last week is of the candle. That's how you draw your zone. Then that whole area is a resistance zone. So this area is a resistance zone, but it's also linking up with this zone as well. So now this whole area is probably a big zone where the dealer might want to trap a bit before they push the price down. So based on this zone, I took this sell. Then based on the close of this M15, I opened another sell. Then I opened one more here. So it's 3 positions for me. If price comes in here, I'll be looking for candlesticks. I think I sent you guys the Candlestick Trading Bible. Please go through that book. I'll be looking for candlesticks like these. Candlesticks like these. Candlesticks like these. Bearish engulfings. These ones. These are the candlesticks I'll be looking for in this area. If I get any 1 or 2 candlesticks like that, especially with a follow-through candle, that's when you see that I'll increase my lot sizes now. I'll go 2.5, 5 lot size, maybe even 10 if I've got an edge, because trading is about an edge. Sometimes when you see certain patterns, those patterns, they tell you that price is definitely going to fall. So at that point in time, you can go in full margin if you're not scared. But I'm not advising it though. So always make sure you protect your capital always, so that you can survive to trade the next day, survive to trade the next week. So rule number 1, always protect your capital. So I think that's it for now, guys. I hope this will help somebody. For today, these are the only setups I'm looking at. Maybe if I come back on the charts a bit later, we might look at B1, B5 I rarely traded, but we might look at those other 2, and anything else which you guys might want us to discuss, you can just WhatsApp me. Then we can have another Zoom session probably later on in the day. But for now, I'll just leave you guys with this. So happy trading, have a peaceful day, and take care of yourselves.